There are things you can do with an IRA that you just cannot do with a 401k. And most people think these accounts are basically the same, but they're really not. These differences can affect your taxes, your flexibility, and your retirement income. There are 5 important differences you need to understand for your literacy on this subject. I'm Matt Williams, a family financial advisor, and I see people make these mistakes a lot. So let's walk down what I see as the 5 and more important ones so you don't make this mistake yourself. Number 1, charitable giving. If you're age 70 and a half or older and charitable giving is already part of your life, this can be a really important tax strategy. With an IRA, you can make what's called a qualified charitable distribution, QCD for short. That means you're able to send money directly from your IRA to a qualified charity. You can do this for up to $100,000 per year. And here's why that matters. That money never shows up as taxable income. Lower reported income often means lower overall taxes. And in many cases, that distribution can also count towards your required minimum distributions, or RMDs for short. This is something that only works with IRAs. A 401k, this doesn't offer that kind of flexibility. Number 2, education expenses. Let's talk about education costs. If you're age 59 and a half and under and need money for college expenses, things like tuition and books and technologies, IRAs can offer a penalty-free exemption that can make a big difference. You still owe income tax on that withdrawal, but you could avoid the additional 10% withdrawal penalty. Again, that option does not exist with 401k accounts. For families trying to balance saving for retirement while also paying for college, that distinction really matters. Number 3, control over your money. This is where many people start to notice a difference. With a 401k, your employer sets the rules. If you're still working, your options are usually limited to things like loans or hardship withdrawals, and even then, that approval isn't guaranteed. So with an IRA, you're in control of the account. You decide when and how to access your money. Sure, taxes and penalties can apply if you withdraw too early, but that added flexibility can be a really valuable option, especially when life throws something unexpected your way. Life goes sideways sometimes, right? Number 4, required minimum distributions, RMDs. Many retirees end up with multiple retirement accounts, and this is where things can get complicated. With 401ks, each account has its own RMD, and each one has to be taken separately. With IRAs, you can still calculate the RMD for each account, but you're allowed to combine them and take the total from just one IRA if you want. This might sound like a small detail, but missing an RMD can result in penalties of up to 50% of what you should have withdrawn. So a simpler system can help reduce these costly mistakes. Number 5, tax withholding control. Another key difference is how taxes are handled. With 401k distributions, there's often an automatic 20% federal withholding. So IRAs can give you more choices. If you already have taxes being withheld from other income sources and you're making estimated payments, you can reduce even or eliminate the withholding altogether from that IRA distribution. That keeps more of your money working for you instead of sitting at the IRS. So here's the bottom line. Retirement planning isn't just about how much money you can save over time. It's also about where you save it and how those accounts are structured to work together. If you have an old employer retirement plan or plans, or if you're getting closer to retirement, or if you're even thinking about doing a rollover, these choices can have a direct impact on your taxes and how reliable your income is in retirement. And that's where a coordinated plan really matters. If you'd like some help reviewing your current setup and making sure everything is aligned with your goals, let's talk. Because sometimes small adjustments made today can lead to much better results down the road.